Good evening, money magnets. It's your Uncle Charles here. We had a pretty underwhelming price action from the SPY intraday. Had some decent scalp moves in my opinion, but overall, a little underwhelming. But we did get a pretty nice move at the end of the day. A trend move towards the upside, smashing my 592 level, stalled around that area end of day. Now trying to gap up. If you look at the intraday price action, something that I like to pay attention to or like to watch out for are the trap setups. And I like to ask myself, who was the last group of traders that got trapped? And in this case, you can see here we had a false breakdown setup, which is a bullish setup. This tells me that the last person to get trapped was the bear or a bearish trader. You take that concept on the 15-minute chart, we can apply it to the daily chart, and we have to look at on the daily chart which group was the last to get trapped. And I would say on the daily chart it would be the bears as well. You guys can recall we lost my 585 Fibonacci level. That's a macro level fib level. We lost that level back on May 21st, recaptured it May 22nd. And in the last few days, the last few trading days that is, we've retested and backtested that 585 area as a support. Bears had the opportunity to break back below it. And once again, even today, we had buying pressure from 585. The bulls managed to maintain the trap that they set against the bears by holding that 585 level as a support level. You guys can also see that we're flagging here, which can explain the low volatility. We are in the chop phase, technically speaking, and I believe that there's a good chance that the next couple of trading days volatility should pick up, whether it be bullish or bearish. Now, if we can break out this bull flag, that would need SPY above 592, even a breakaway gap, just staying above 592 would put 594 and 595.5 in play, and above 595.5 should send us to higher highs. So above 592, I would favor some trend move towards the upside. But below 592, now that we tested for the third time, the top of this flag for the third time, if we are below 592 and we start breaking down support levels again, now I know we break down support levels a bunch of times, but now the context is a little bit different. Because if we break it down after this test here, it should send us a lot lower, maybe to the bottom of the flag. Now below 592, we start breaking down 590 and 588. That should send us back down to 585. And below 585, Unco would be confident we could go fill the gap around 579 and even touch the bottom of the flag around 574. So from 585 down to 579 to 574 range, that'd be a pretty good move. But it needs to stay below 592 and break down those support level. Staying below 592 avoids the breakout, and breakdown of the support level, especially 585, would be bearish follow through, showing their selling pressure from this rejection. Otherwise, above 592, we are in breakout mode. And getting above 595.5, which was the last pivot high, should send us to new pivot high and maybe back to all-time highs. Good chance. Triple Q, watch that 523 level carefully. That's an important fib level that I have. I know we're above it right now, but if we're above it, we're bullish. And clearing 525 and 527 would be bullish follow through, setting us to 530, 531.7, and 533 plus in play. But if we're below 523, look to short only if support fails at 521 and 519.2 to put 518, 516.3, and 515 or lower in play. Now we do have that multi-month trend line. It's still holding strong. Breakdowns around 514 area. Bears will take back control. Otherwise, the overall trend is still bullish, and getting and staying above 523 will continue that bullish trend. NVDA with the inside candle setup. First level to watch is 137.4. If we are above it, that would favor the bulls. Now I'm watching the 140 level for the inside candle setup to end bullishly. Uncle is watching the 140 level. If it clears 141.5, 144, and 145.6 plus in play. I would be bull bias of above 140. But if we're below 137.4, that would put 135.6, 134 in the bottom of the chop range around 133 in play. It's actually 132.9. We could round it down to 132.8. But below 132.8, the chop will end bearishly, and bears will be in control, setting us a lot lower, possibly back down to 129. Fill the gap around 122-ish, and another gap around 117-ish. Here is Tesla. Heading down from that megaphone pattern, 339.8 is still the level to watch. We watched below it today, but managed to avoid a breakdown, a bearish breakdown on the daily chart. Had a gap around that area too. So below 339.8 should send it to the bottom of the megaphone pattern around 325-ish. That would be a beautiful move to the downside. Otherwise, if we stay above 339.8 and clear next resistance, I have at 345 and 348. That should send us to 350 and 353. And above 353, I would be bullish, at least back to the top of the megaphone pattern. That's 370 plus. Coin looking like it's consolidating a little bit. 246.7 is the level to watch. Above it is bullish, but we need to clear 248 and 250 for bullish follow through to send us back to 254, 256, and 257.5. Now we're below 246.7 and we break down 245, then I think we can drop back down to 239. Below 239, I'd definitely be bearish, at least down to 233, 231.5 in the 230 area. VIX still looking bearish to me. The only way to be bullish to me is if it's above 19 and 20.4. Otherwise, looking bearish. I think we can go hit 17 and below that. 15 and 13 would be my next target. Guys, thank you guys so much for watching. Volatility will be returning soon. We are still technically in the chop phase. So once the chop phase ends, the trend phase returns. Peace.